Hello everyone, this is Yoko. On this channel, I'll be sharing information in English that I've gathered because events happening in China often don't get reported in other countries. I collect information from various media sources, so I would appreciate your comments on the content of the videos. If you enjoy the content, please consider subscribing to the channel and showing your support. Today, I'd like to talk about Chinese banks. Currently, both lenders and borrowers are facing tough situations in China. First, let me introduce an article. Although it's about Hong Kong, the situation is similar on the Chinese mainland. Just like in Japan, when you buy a condominium, you usually take out a loan from a bank, right? For banks, providing housing loans is essentially a profitable business because people buying condos usually prepare a down payment and borrow the rest from the bank. In other words, the value of the condo is usually higher than the amount lent by the bank. Therefore, the bank can take that condo as collateral. If the borrower cannot repay the money, the bank can sell the condo to recover the funds. Therefore, for banks, having collateral worth more than the amount lent is a safe option. Housing loans typically span 20 or 30 years, allowing banks to consistently earn interest income over this period. Hence, it's a long-term profitable business for banks with minimal risk of default. However, the situation is different in China. Due to the collapse of the real estate bubble, the prices of condos offered as collateral have fallen below the loan amount. This means the collateral's value is lower than the outstanding loan balance, creating a nightmare scenario for both banks and borrowers. It's like living in the hell's third district for both parties. They haven't reached the first district yet, but once they do, there's no turning back. For banks, the risk of not being able to recover the money they lent increases. They thought it was a good business, but as the real estate bubble expanded, continuing to lend led to this situation. It's tough for borrowers too. While they've been making monthly payments on their housing loans, the principal has increased due to the real estate bubble, making the interest burden heavier. Furthermore, due to the slowdown in the Chinese economy, household incomes are not as stable as before, further increasing the burden of monthly loan payments. However, there is an escape route: selling the real estate. By selling the property and repaying all loans, one can escape from monthly payments. However, if the price of the real estate is below the total loan amount, selling it won't fully repay the loan. Therefore, debt remains even after relinquishing the property. If the problem remains unresolved, banks resort to legal procedures and the court intervenes to sell the real estate. However, forced sales usually result in lower prices than voluntary sales, worsening the situation for both parties. This vicious cycle leads to the worst scenario: losing the property and still having debts. Furthermore, there's another headache for banks: early repayments. This issue has been gaining attention since last year and is becoming increasingly problematic for Chinese banks. People who took out housing loans are rushing to make early repayments because it's becoming impossible in China to earn higher returns than the interest on housing loans. These are some of the challenges facing Chinese banks and borrowers in the current real estate market situation in China. For instance, when lending funds to companies through shadow banking, there's a risk that the funds might disappear if the company goes bankrupt. Recently, attention has been focused on liquidation orders for large groups, and discussions about defaults on financial products have somewhat faded. However, the bankruptcy of the China Zhongzhe Group poses a significant problem for the Chinese economy. People in China who had substantial funds were investing them further to increase their wealth. However, if that money doesn't come back, it will have a significant impact on domestic consumption in China. Additionally, there's an increasing fear in China about losing everything by dabbling in financial products. Therefore, avoiding losses as much as possible has become a universal sentiment, and there's an atmosphere in China where reckless investments are criticized. If the interest received from depositing money in a bank is lower than the interest on a housing loan, it's better to repay the debt and lighten the burden of interest. Investing in stocks carries the risk of price decline, and investing in financial products carries the risk of high defaults. Therefore, ultimately, reducing the burden of housing loans seems to be the most rational choice. People with financial flexibility are rushing to repay their housing loans early. From the bank's perspective, this is the worst-case scenario. Banks want to continue receiving interest on housing loans from customers who can repay them. However, if too many people start repaying their loans early, the stable interest income of the bank decreases. The financial industry is a game of lending money to make profits. From loan sharks to banks, it's all the same. If everyone repays their debts, the business collapses. Therefore, when someone is economically struggling, banks try to lend them money. However, for individuals with financial flexibility, banks want them to borrow more over the long term. But in today's China, the opposite is happening. Those without financial flexibility can't repay, while financially stable individuals want to repay as soon as possible. This is a significant issue for bank management. Regarding this phenomenon, for example, around this time last year, there were articles about how Chinese banks were handling requests for early repayment of housing loans. They were said to take time to process and required customers to wait in line. Essentially, one needed to make a reservation for early repayment. As of February last year, even after the end of COVID, reservations needed to be made over a month in advance. In other words, banks couldn't refuse requests for early repayment. However, because they didn't want early repayments to happen frequently, they attempted to obstruct them through various means. One method mentioned in the article was instructing customers to wait for over a month. Additionally, when trying to make a reservation using the bank's app, all slots would often be filled within a minute of reservations opening. Essentially, banks were trying to prevent economically beneficial customers from leaving due to early repayment. However, those wanting to make early repayments often dealt with significant monthly expenses and wanted to alleviate them. Therefore, they waited even if it meant waiting for a month. It's only a matter of time before the bank's revenue is pressured. These discussions were very common last year and indicate that Chinese banks are increasingly struggling to make profits. Furthermore, there's a possibility that a considerable portion of unpaid housing loans is being restructured, which could lead to a decrease in property prices and further increase in non-performing loans. They seem to be caught in a dangerous negative spiral. Currently, the Chinese government is trying to inject funds into places experiencing a shortage of funds through banks and implementing lenient lending policies. However, the crucial question is how long the banks themselves can withstand such a situation. That's all for this time. Let's meet again next time.